What's going on, guys? It's the Money Talk Show with Dane, where we talk about all sorts of interesting topics having to do with money, primarily real estate and crypto here. So we're pumped to have you guys on this morning. We've got an excellent guest yet again. Had a huge lineup the last few weeks, so we're pumped to have our friend Clay Rockwood on this morning. We are doing our best to be the bridge between entrepreneurs, real estate investors, and helping them understand what we feel like is the biggest opportunity over the next few years in cryptocurrency. There's no place where you can get returns like you can in crypto if you're willing to sit through the volatility and be patient with your approach. So you're in the right place at the right time. We're pumped to have you guys on this morning. With that, Corey, go ahead and take it away.
Yeah, man. Crypto Millionaires with Corey Geary here. It's an absolute blessing to be on this journey with as many as entrepreneur friends as I possibly can. You know, we've done really well in real estate, and in the transition into crypto, I feel like it's the right time, the right place. With the economy, what's going on with the macroeconomics, we're probably going to see some kind of relief going into 2024 with the presidential elections, and we have the Bitcoin halving. So I think we have some of the best opportunity to create legacy wealth right now at this time. So it's just a true honor to be on this journey with all you guys, and I want to take as many friends along for the ride as possible.
Absolutely. So our friend Clay is one of my longtime real estate investor friends that I met a number of years ago. Clay has accomplished some really big things in the space. And so let's start there, Clay. Go ahead and give us a little background on you and kind of what you're up to today.
Yeah, no, thank you, Dane and Corey, for having me on. It's a pleasure. So, yeah, my journey started back in 2008, really at the at the peak of the last crash is really when I got in. I was just getting out of college and decided I wanted to get into real estate. I had a rental or two, and my brother was in it. So I kind of thought, hey, I'll give, what else can I lose? I have nothing to lose here. I'm fresh out of college, had no other experience, no other really ambitions for any other career. So got my real estate license, started working as an agent, as a realtor. And I soon realized I didn't really enjoy that, because as an entrepreneur, I wanted to have time freedom and really not be a slave, right, to someone else's desires. So I realized as an agent, I was still, kind of at the beck and call of my clients. Showing homes nights and weekends, didn't really like that.
Nights and weekends job, that's right.
Yeah, but along the way, I'd owned a rental or two with my brother and my mom, and so I kind of had that bug. And so my wife and I bought our first property. It was a triplex. We lived in one of the units and rented out the other two, and basically lived for free. And so that's when it kind of really clicked for me. I was like, hey, this is something, I could do to just slowly over time build wealth, right? Passive income, generational wealth down the road. I've always tried to think 10 years ahead and like, okay, what will 10 years from now, Clay, think of the decisions I made today, right? And that's the mindset I try to get into. So that's really what we did. We started buying 1 or 2 properties a year, just small rental properties, duplexes, fourplexes, that kind of thing over the years.
Now, were you house hacking the whole time? You would buy one, live in it, and then rent it out, and then buy another one and move over there?
We only house hacked that first one. And I honestly, I kind of kicked myself. I wish I would have done that more those first few years before we had kids or before we had more expenses. But we just did it once, and then we bought a house to live in. But then I just, would take basically all my income from real estate and would throw it back into properties, right, as a down payment or seller finance options, things like that. So that's kind of what we did. I started flipping homes. My brother's a contractor, so we'd partner up and do flips. And just kind of over the years, it just evolved, right? We got into wholesaling about 6 or 7 years ago. Started building a team to do, we were doing about 100 wholesales a year. And along the way, we're just slowly building our portfolio, started getting into some larger deals, 10 unit type properties, 20, 30, 50 unit type properties. And just the more you do, the more you kind of learn and understand the process, the financing, until we built, a decent sized portfolio, nothing huge, but, now we have about 300 doors in multifamily, and then we own about 120 doors in mobile home parks. And so now we're just really focused on buying larger assets. That's kind of kind of what we do now. So we just buy larger apartment complexes and mobile home park communities across the U.S.
So cool. So talk to us about, I think it's really important. In fact, it's fascinating in real estate and life in general, right? You start out with a vision in mind of something that you're going to go and accomplish and tackle. And oftentimes it turns out to be a little bit different than originally anticipated. And so I'd love your insights to reflect back on your real estate career. Looking back now, what are some of the biggest wins you've had, some of the biggest learning experiences that you've had, and maybe what you'd recommend to people if they were going to start off as an entrepreneur in general, some of the things you'd recommend?
Yeah, that's a good question. I think some of the biggest win I could say that we've had, honestly, has just been taking disciplined action over a long period of time, right? Like, I think everyone looks for like the next big thing or the secret sauce, or, how can I skip, the hard work and just jump straight to the fortune? But I don't know. I've found that those types of opportunities are the unicorns, right? They're not as common. And really what it comes down to when you kind of, again, look back over that 10-year period, you say, okay, what was the deciding factor? And for me, it's always just been doing the daily tasks that are going to move me towards my goal, right? It's nothing fun. It's nothing sexy. It's just like taking consistent action over a long period of time gets the results. And I think that's where a lot of people just get hung up, is they're not willing to do the small daily tasks. And I mean, that in crypto, that could be dollar cost averaging, right? Just like, this is boring buying that $100 crypto every day or every week, but accumulate that over 5-10 years, and you amass a large portfolio, a fortune. So I would think that, to me, is what defines the success at least for me, in our space. And some of the trials, I guess, are things that, maybe for someone wanting to get into either real estate or as an entrepreneur, honestly, you have to have thick skin and you have to be able to roll with the punches, because it's a roller coaster, and I truly don't think it's right for everybody. I mean, there's days even for me, I'm like, dude, I got to get out of this. This is crazy. I'm just going to get a 9-to-5 job. You know what I mean?
Right.
But so I think there's that. You just have to know your strengths, your weaknesses, what your risk tolerance is, your stress tolerance, all that kind of stuff. So, and you don't really know that necessarily until you go out and try something, but the rewards can be massive. I mean, we have a $40 million portfolio now that's going to pay dividends for generations, right? So it just depends on what your goals and your objectives are.
Right. I like that. One of the things that's been one of the biggest lessons that I've learned over the last few years is I haven't taken really any big losses until this last year with real estate. In fact, we didn't lose any money on any deals until this last year. We were very conservative in our approach. And even on the ones that we lost money, I felt like we were being relatively conservative. And it's fascinating to take a step back. I have another friend. So I was reflecting on my experience this last year. And then I have another friend that went and bought a bunch of properties in another state with some connections that I have. And I told him before we started, I said, look, I'm just going to buy, there was a 16-unit portfolio. I said, look, I'm just going to buy. And for those of you that are watching, that might feel like a lot, but it's actually not that. It's not that difficult to do with scales of economy and a team, and you raise a little bit of money and you can put that together relatively easily once you kind of get your footing. So I said, look, I'm just going to buy these 16 units and then I'm going to see how it goes. I don't know these guys, super well. I met them at a real estate mastermind, and I want to see how it actually goes before we look at scaling this, because it looks really freaking good right now. And I'd recommend to be patient. Just be patient and see how this goes. And he did the exact opposite of what I suggested. And he went balls to the walls in the portfolio. He went from 0 to 50 units in 8 months. It was very quick. And it wasn't 0 to a 50 unit. It was 0 to, duplexes, triplexes, fourplexes, single families, a little 6-unit, like a cluster of a bunch of these. So there's a lot of freaking work to get there for what he bought. And then with the market changing and lending getting to a place where it kind of sucks right now with interest rates being higher and things of that nature, he's in frankly a pretty tight spot. And he said to me, Dane, I thought that I was working within my realm of risk tolerance here when I was building this thing. And it all comes back to the Mike Tyson thing. Everybody has a plan until you get punched in the face. And
Yeah.
I think that most people, they don't know what their risk tolerance is until they get punched in the face a few times and have some losses. And then they can take a step back and say, well, that hurt really bad. Like maybe I want to play my cards a little different moving forward.
Yeah.
What are your guys' thoughts on that?
He FOMO'd into his position there. Just how people do in crypto, and overexposed himself where he's probably lost a lot of sleep at night. How we talk about all the time, be very careful not to invest more than you can handle due to your risk tolerance. And it sounds like your buddy did that in the real estate space. He really FOMO'd hard when he thought he saw a good opportunity, and it ended up hurting. So that's crazy. You can do it in real estate just how you do in crypto too.
Absolutely. So Clay, let's talk about, so you guys have built a substantial portfolio at this time, or at this point. There's a lot of our crypto friends that they want to de-risk. In fact, this was one thing that I found fascinating as I was getting more involved in the crypto space. We'd go to these crypto events, and a lot of the guys would and the ladies would say, we'd love to get into real estate. And I would
always go, why?
Yeah,
really? Why you want to do that?
You're in the highest appreciating asset class in the history of the world, and you want to go to one that's far less appreciating. And the feedback was always, well, for tax purposes and consistent cash flow, consistent passive income, that's at least a lot more consistent than cryptocurrency. And so you've got your capital group where you guys raise capital and you're finding new properties every single month. What would you recommend if somebody was that person and they wanted to de-risk and they wanted to accumulate real estate? What are some of the things that they should be looking for in an operator to try to make sure they were partnering with the right people?
Yeah, that's a good question. I mean, I think the first thing you need to ask yourself is, do you want to be an operator? Meaning, do you want to go buy that property and operate it yourself, manage it? Even if you have a property manager, I mean, there is no passive income when you own a property yourself. It's truly an active business. I don't care what anyone tells you. There's just a lot of work that goes into it. So you just have to ask yourself, is that what you want to do? Or do you want to be a true passive investor and invest in either a syndication or with another operator like someone like us, where we go out and do all the work, right? We find the property, we put the deal together, we manage it, we asset manage it, all that kind of stuff. So I don't know. I mean, and that just really depends on kind of your capital balance, right? Someone that's like, hey, I've got 5 or 10 grand. Can I, I'd be like, yeah, you're not. Yeah. I mean, the minimum is at least 50 to 100 grand to invest in most people's deals. So you have to have a decent sized pool of money to even be a passive investor. So that's kind of the first thing. But how do you find, if you have a, if you've made some money in other business or in crypto or whatever it is, and you want to, diversify, maybe puts that money in real estate, how to find a good operator? That's a tough question, because really a lot of it, you're trusting either a referral, right? Someone like, that's like, hey, I've invested with this group. They've done a great job. Here's what my experience has been. So that's a lot of it. It's really just kind of word of mouth, looking at their track record. Like, how many deals have you done? Can you show me? Like, give me the addresses. Show me what the returns were. Show me what the business plan was. So that's kind of how you can vet an operator, is just looking at their track record, talking to other investors that have invested with them. And that's very common. I mean, it's something that they should openly share. If they're not openly sharing that, that's a concern, right?
Yes.
So I just like to look at, and then I think it's a good idea to get on as many people's lists as you can. I mean, there's no shortage right now of people raising money for deals, right? I mean, and look at the different returns they're offering, the timelines, and to see if it aligns with what you want. Like, for example, I mean, I know of some guys that are starting a 20, 25 year fund, meaning your capital is locked up for 20 years. I mean, if that's what you want, great. And the returns look good, great. But most investors are like, oh, I want my money back in 3 to 5 years. I can go do something else with it, or, go buy a house or whatever. Right. So it just kind of comes down to what operators is running a business in the way that aligns with your goals. And again, I would say just get referrals and, try to work with people that have a great track record.
Yeah. I like the track record tip. I was talking with, I had another group that was trying to raise capital from me. And so we jumped on a call to talk about what they had going on and their deal structure. And the guys were really cordial and nice, and they built out what appeared to be a really good team. But when we got down to brass tacks, I said, well, tell me about your deals. Well, this one partner on our team has done this deal in the past, and this other partner has done this. They said, no, like, what have you done as a team? Oh, well, we haven't done any deals yet, but we've put this really cool team together. And that can be good for the right person. I know for me and for my risk profile and my goals, I was really frank with them. I said, look, it sounds like you guys have some really cool things going on, but I'm going to be really honest with you. I'm just not interested in being a guinea pig in any way, shape, or form again in my investor profile. I'm not interested in betting on new people. And this is hard because there's a lot of people that feel like me, and new people are like, well, how do I go and like get experience if no one will give me the shot? You got to go find somebody that'll give you a shot.
Yeah.
I'm not that guy right now in my
We
career.
were that guy before. You know what I mean? There's no need
Yeah.
to do it again. We've done it. We've been the
Right.
guinea pig with certain operators. And I'm not going to do it again either, because once you do it one time, okay, well, you got me now. I paid my dues. Someone else needs to pay their dues now.
Yeah, exactly.
Right. So, okay. So I like, so looking at somebody's experience, what are the, so give us a few examples. The guys on our show, including myself, we like to see numbers, a rough general idea. And of course, we're not going to ask you to disclose things that you can't, but it'd be cool to look back at a few of your previous deals and say, hey, like, here's an example of a deal. Here's the capital we raised. Here's the types of returns that our investors may be able to anticipate over the next several years. Walk us through some of that.
Yeah, that's a great question. So historically, and again, I'm not going to sit here and pretend like we've never made mistakes or everything's gone peachy and perfect, because that's just not the truth. And I think if anyone tells you that, they're lying.
Yes, run if they say
run. Like, everything's done perfect, just as planned. Like, that's not how it goes. And frankly, that's how we've learned. I mean, I've been involved personally in over 500 transactions over the years, and that's single family and commercial, and so I've learned a lot, right? Historically, with the market appreciating, it was really hard for anyone to fail. Like, if you were failing in the last 10 years, minus the last year or two, then you were just not smart. But so it's kind of been clarifying over the last year to kind of see how that fleshes out and see who's really knowing what they're doing, who's really a good operator. And honestly, for us, I think it exposed some things for us on the management side. We've actually recently decided to take our property management in-house, where we were previously, referring that out third party, and there's a bunch of complications there. But as far as kind of returns that we've had in our deals and kind of the numbers, so on our previous deals, we've achieved at least a 25% IRR, or basically a 25% annualized return for our investors, right? And that's kind of our metric now is we, on deals that we're doing now or future deals, is we want to at least get a 20% IRR for our investors in the deal.
And guys, for you crypto guys, that's our yield.
Yeah, that's your annualized yield, basically, when you average it out, right?
We got to speak a little bit of crypto for these guys, because they're not going to understand what IRR is.
Yeah, it's a weird term, and I don't know why it's used, honestly, in this space, but because it is kind of confusing. But it takes the time value of money, right? It's basically your annualized return over the whole course of the project. So if you're in the deal for 3 to 5 years and you sell, you should be getting at least a 20% annual return on your money. So that's kind of our metric when we're underwriting deals and looking at deals. If we can't achieve that, then we won't do the deal, right? So historically, what we've done is we're heavily involved in value add properties. So we're not going out and buying Class A, nice brand new built multifamily properties. We're buying properties that are distressed. Maybe the previous owner hasn't, ran them properly. They've kind of run them to the ground or self-managed, right? So we'll go in and those types of opportunities off market, buy them, put a lot of work in renovating the units, getting the rents up, and then selling at that point. So those are the types of projects we like and the things we're used to. So those are kind of some of our historical returns for investors and how we underwrite deals now very conservatively. One other thing I just want to mention here, because I think this is important in today's climate with the interest rates. A lot of groups have gotten hurt, and we'll continue to see that over the next year or two, of people that got in on floater rates loans or bridge loans. So kind of these short-term loans at high, volatile interest rates. And that worked when the rates were good, but now that they've come up, I mean, it sometimes can double or triple your monthly payment to the bank, right? So we always go in at fixed rate debt, like fixed interest rate, for at least a 5 or 7 year term. So we know that, hey, even if the market were to correct more than it has in the next 2-3 years, we're still fine. We still have a fixed rate interest rate, like loan. It's not going to change. We underwrite for that. So I think just some of those things are key when you're looking at an operator's deal or how they're structuring the debt. That's a huge piece of the puzzle that you need to be aware of and make sure the operator has kind of mitigated for that potential risk.
And give our guys an idea. So at the best times in the market when the rates were the best, what was a commercial loan like as compared to what they're like today?
First of all, you could get more money, right? So like loan to value. So I would see loans in the 80 to 85% LTV, meaning you could borrow up to 85% of the purchase price from the bank, right? That's kind of gone away. It's now like honestly closer to 60, 65, to be honest. So banks have just reeled back and become more conservative. So you need more cash to put in the deal, right? The second thing is obviously the rate. Like back in the day, we were getting rates in around high 3s, low 4% rates. I mean, our deal we have under contract now is mid 7s, 7.5, or 7.65. So drastic change, right? I mean, those are the two big things. Underwriting has gotten more strict, obviously, from banks. They're just a little more conservative and hesitant on the lending side. So yeah, just some of the changes we've noticed.
Cool. Very cool. We've got a number of people in the comments. Appreciate you guys tuning in today. Harmonic Hexkin is on our shows almost every morning. We appreciate you tuning in. Juan's in our group. What's up, Juan? Hex Glenn is here. Jen Hex is here. Tom's in our group as well. And Tom is spot on. Amen. It's not for everyone, and that's okay. Tom's a real estate guy as well. Tom's Tom is very accomplished. And I think it's funny when I was really excited about being an entrepreneur, I remember thinking that why doesn't everybody do this? There's so much money to be made and you could change your life. And the fact of the matter is most people just they're not built. They're just not built to do it.
Yeah.
We're not built for lawsuits. Come on, man.
I'm involved in like 4 lawsuits right now. So
I mean,
yeah.
I'm 2 or 3 at a time is my normal. In fact, I got one that yesterday, title company calls me up and you have a memorandum on such and such property. This is from 2 years ago. And I'm like, yeah, I remember that property. And now I have to get my attorney involved and I'm going to go into another fight. I had won one of these last year and for specific performance, I won it with my attorney, took the property down, flipped it, and I'm going to do it again. I'm going to go after them.
Exactly. Yeah. But that's just what you get into, right? Is stuff like that.
Yeah. It's fun.
I've got one and it's interesting, even when you're honest and you're a good operator, the kind of the rule of thumb is you're not doing enough business in real estate if you're not getting sued.
That's true.
I had one where more recently, actually, this was a deal. I'd forgotten about it. This was from like 3.5, almost 4 years ago, where we had a property that we were under contract to buy. The seller just vanished right before closing. We couldn't get a hold of them. And so we filed a notice of interest against the property because we wanted to maintain our right to purchase that property. according to the terms that we'd agreed to. And so another real estate investor came along more recently and said something along the lines of, "Oh, we can help you. We'll give you this awesome deal. We'll get rid of Dane and his team. We'll get rid of their notice of interest." And so they filed a lawsuit against me and also challenged my real estate license with the division of with the state. And so the state sent me this notice and said, "Oh, there's these claims that you've done these illegal activities on this property. Here's the claims." And so we had to go and fight that one. And thank goodness, like, we operate at a really high level. So I've got all the proof to be able to say, no, like, here is actually what happened, and here's the supporting documentation. And so if you aren't willing to go through this stuff, then real estate may not be for you as far as being an operator is concerned.
Yeah, definitely.
Cool. So if someone comes and invests in a deal, you talked about structuring the debt. I think this is really important for people to understand. So when you say a 20% annual return, IRR, so if I'm an investor in your deal, am I anticipating that if I put $100,000 in, for easy math's sake, that I'm going to get $20,000 back every year? What does that look like?
Yeah. So basically how we structure our syndication deals, right, where we're aggregating a bunch of different people's money in the deal, and they get a share in the ownership of the LLC. So how we do it is, and this is pretty standard for most syndicators, is we pay anywhere from a 6 to an 8% preferred return. Now, what that means is every year we're going to pay you 8% on your money, and that's typically paid out every quarter. So 2% per quarter, and that's just from the cash flow of the property, right? So we like that, and investors like that because they're collecting some income along the way, right? It's not like, hey, I put up my money and I'll get something back in 5 years. It's no, you'll collect part of the cash flow every quarter with us, so up to that 8% return. And then after that, we have some sort of equity split. It could be 70-30, 80-20, depends on the deal and how we underwrite it. But that means, the investors or the limited partners get 70% of the equity or the ownership in that property. And we as the operator or the general partners get, 20 to 30%. So that's a very standard and a simplified syndication structure that you'll kind of see out there. I mean, there's other groups that have crazy waterfall structures, like once they achieve an X% return, then the equity splits. But we try to avoid that and just keep it as simple as possible. So that's our structure. So basically, our investors are collecting 8% per year or more. I mean, our deal we're closing on now, mobile home park portfolio, we're buying year 2, they're going to be like 12% cash on cash return, and then it goes up from there every year. And so it's awesome returns. So, but that's typically how it works. And then when the property sells, obviously we've built equity in this property, right? We've taken the property from what it was. We've added value through renovations, through raising rents, and increasing the net operating income, which obviously adds to the value of the property. So when we sell, there's going to be a big check at the end. And so, investors are going to collect a massive check at the end. And so when you average that all out, that 8% per year, plus the big check at the end, that's where you get that annualized, 20% or more return.
Which is great for deals. I've talked to many operators. That's a fair deal.
Yeah, exactly. And again, we want to make it a win-win, right? Like, there has to be a benefit for an investor to invest with us, right? Sure, there's risks. There's higher level of risk in this versus maybe going out and putting your money with, Coca-Cola stock or something. But sure, I don't agree with that. But there is a level of risk. But again, it's mitigated with some of the factors we've already talked about.
Yep, absolutely.
So let me give you a scenario, and I'm curious how you might structure this, because I think a lot of crypto people, if they're operating at a high level and they're being patient and all those types of things, come 2025, maybe 2026, they may be sitting on very substantial amounts of money. If someone came to you and they said, "Clay, I've got millions of dollars. I want to allocate, a few million to real estate. I like you guys. I want to invest with your group. And here's what I need. I have a huge tax burden that I'm going to have from taking these crypto profits. I don't necessarily need cash flow because I have a lot of money now and I'm in a good spot there, but I need to protect myself it from a tax liability perspective, and I want to preserve and grow my wealth here. How might you structure something like that?
That's an awesome question. So, I mean, that's the other benefit of why I love real estate is the tax benefits, the depreciation that you get. I mean, I could talk for an hour about that alone, but what we do, and I mean, in a basic term, the IRS allows you to depreciate an asset, right? Basically, it's a fancy way of saying the IRS gives you credit for owning real estate, basically. They don't want to own and operate it, so they're incentivizing other people to own and operate real estate, right? So we do what's called a cost segregation study. We accelerate depreciation, meaning we try to take as much tax benefit in the first year to 5 years as we can, right? And due to the tax laws that are in place currently, I mean, there's even a bonus up until 2026 of bonus depreciation that you can take. So really, in the next few years is even better time to invest in real estate just for the tax benefits alone. So on most of our deals, I mean, that's a common question we get from investors are like, yeah, I've got money. Like, I'm not worried about the monthly cash flow necessarily. Like, I just want to offset my tax bill. Right. And that's honestly what got me even more interested in doing larger deals. Cause at one point out, I had a few years ago, I was paying like $100,000 a year in taxes. Yeah. I remember my CPA calling me saying, "Hey, Kay, you owe $100,000 to the IRS." I was like, "What?" He's like, "Yeah, literally, you need to write a check for $100,000. I like almost lost, I lost it. I was like, "This is crazy. Like, I'm working, a fourth of my year or whatever it is just to pay the IRS." So once I learned about this strategy, since then I've paid $0 in taxes and made way more money. Right. So
and all legally.
All legally. Yeah. This is a legal process that the IRS allows. Right. And they incentivize. So that, I would say, for an investor like that is huge. And we pass on all the depreciation to the investors, right? So depending on how much they invest, they get a huge chunk of, the depreciation, which offsets their passive income, et cetera, et cetera. So yeah, that's how we structure our deals to make sure the investors are incentivized with the tax benefits on the cost seg and the depreciation so that they can benefit on that as well. And that's not even factored in to the returns we've been talking about. Right. I just kind of view that as the cherry on top. That's just the cherry on top as for you investing in real estate. You get this amazing return, plus you get the tax benefits. It's just a win-win, right? All around. And I don't know any other asset class. You talk stocks, crypto, anything that has that.
Agreed. Nothing like it. It's remarkable. And I haven't paid taxes in years either because of the same reasons. It's been pretty remarkable. Yeah. So if we were to I'm going to put you on the spot a little bit. I want you to try to give us like rough numbers. Let's say that I had enough money. I had $5 million or $10 million. And I say to you, Clay, this is probably enough to go and buy one property, one commercial property. I want to fund the whole thing. It's me and you guys, and I need the tax benefits. How much in tax savings might I be able to see? And now, once again, nobody here is a CPA. None of this is financial advice. We're just asking for, what has previous experience said, hey, this is roughly the benefits that you could see on, $5 or $10 million.
So in our experience in the deals we've done, typically it's anywhere from 30 to 40%, dollar for dollar. So you invest $100,000. You could, again, it depends on your structure and your passive income and losses and what tax bracket you're in, right? So that's why it's hard to answer like a broad statement, but in general, yeah, you could offset for every $100,000 you invest, $30,000 of taxes. Gotcha. Personal income tax, right? So this goes against your personal income tax, and anything you don't use obviously will roll over to future years. So if you've offset your tax, like your tax bill would have been, let's say, for someone of that caliber, $10 million capital gains, tax they would be paying. They have $1 million tax bill, and you can offset that by $300,000, $400,000 or whatever. And let's say it's even greater, and you don't use it, you can roll over to future years. So it's just a massive benefit. Yeah. For people who avoid taxes.
Right. And that's one of the reasons that Corey and I and Clay, obviously, as well, that's part of our strategy. Certainly, Corey and I are different than Clay in that we've largely exited the real estate market for the time being to maximize our crypto stuff. And then come 2025, that's where real estate is going to be part of our plan. And to keep this into perspective, guys, so if, well, Biden has a new tax plan where he's trying to pass a 40% capital gains tax. Hopefully that doesn't go through. But based on the numbers today, at a 20% capital gains tax, long-term capital gains tax, if you buy your crypto and you hold it for, I think it's a year and a day, or maybe it's a year, then you're paying long-term capital gains tax, as far as I understand it, which is a 20% tax. And like Clay's saying here, if you've waited 20% tax, but you can go and offset 30% of your income, so you come and pull that, you could theoretically depreciate all of your taxable income away by using real estate as part of your plan. So this is a huge freaking deal. And that's one of the reasons that I wanted to bring Clay on this morning, to make sure that we really drive that home. Because if you wait till 2025 or 2026 to be taking profits, and you don't have a plan, you don't have an operator in place, and you want real estate to be part of your plan, you're way behind the 8 ball. And so it's incredibly important to develop a plan and a strategy now, and find the right operators that you can start building relationships with and trust and all that type of stuff.
Yeah, agreed.
Cool. 100%. So let's talk about cryptocurrency, Clay. So like I said, we've known each other for a number of years. We started talking about crypto, I think a little bit over a year ago or so. And I had mentioned what I felt like was one of the biggest opportunities that we have over the next few years. As a traditional real estate person that's had immense success, why have you chosen to take risk on and build a crypto portfolio?
Yeah, great question. I mean, I think it's honestly, I just see that there's opportunity and kind of ride the wave of what's the next big thing, right? Now, again, what that looks like, no one really knows, right? But I just believe in the fundamentals of what crypto is and what the possibilities are for the future. I think we're just kind of very at the cusp of what's going to happen and how this is going to affect our society in general. So I kind of, again, I'm not saying, hey, for me, I'm not saying I'm going to jump ship and be 100% in this, right? I don't have the
You're not going to pull a me and Dane.
Which is, there's nothing wrong with that. I'm just saying, and I think the same applies for someone wanting to get into real estate, right? You don't have to go quit your job and be 100% in real estate. Like I allocated a certain amount of money and I said, okay, I'm going to put this aside and I'm going to put this into crypto. Now, I realize that I'm not an expert, nor do I want to become an expert in crypto.
That's right, because you're the expert in real estate.
Yeah, I've got my thing. I've already got my business that I'm focused on that. So I said, hey, I want to diversify. I believe in this. I'm going to take this amount of money, and I'm fine if I lose this, that's okay. It's not going to end my life. I'm not going to take my whole savings and drain it, but I'm going to allocate a certain amount of money, and I'm going to put this into crypto now. Luckily, I'm smart enough to know that someone not being an expert in crypto, I need someone to guide me. I need a mentor. I need a coach. Just like I coach people in real estate, right? I think it's so smart to find someone that can help you. So that's why I approached Dane. I was like, hey man, you're the expert. I've been watching what you're doing. You know what you're doing. Like, I trust you. Again, I've vetted you. I've known you. I've seen your results. Just like we were talking about with real estate. So it's flipped now, right? So you're the operator that I trust and I've decided to go with. So I'm like, hey, show me what to do, right? I literally, Dane, I call him like, hey man, you don't need to go into detail. Like, don't need to explain every little thing. I just need to know the basics. And then I just tell me where to invest and I'll do it.
Sure. And that's one of the things we do in our group. And I want to make sure that I qualify. So everybody in our group makes their own financial decisions, right? They determine their own financial risk. And what we do in our group is we talk about different strategies, things that we are doing, why we're doing them, when we're doing them, what we're doing, how much we're doing. And that way, everybody in our group can develop a strategy and a plan that works for them. Because once again, back to the idea of having a plan and a strategy is critical. And so we have some people that are extremely conservative and a majority of their portfolio is going to be Bitcoin and Ethereum. And then we have other people on the other end of the spectrum that are more risk tolerant and with potential greater gains. And so we help everybody develop a strategy that works for them. And one of the things I'm really proud of, so Clay called me, a week or two ago, and we built the foundations of your portfolio a number of months back. and you said along the lines of, Dane, I haven't done anything in a long time. Like, where does that leave us? And I knew that you'd express that, right? You said, hey, I don't want to spend a ton of time and energy and attention here. And so we built the portfolio in such a way where you don't have to spend hardly any time.
Yeah.
And so we went back in and we revisited your portfolio. We see the passive income that you've generated in the last few months, which has been immense.
I bet you were amazed when you went back in there and saw what it produced.
Oh yeah. Yeah.
You're like, what?
Amazing. I didn't even know how to read it. I was like, did I make money? Like, I don't even know what I'm looking at here.
Like, is this right? Like,
no, yeah, it's been awesome.
So that's that. And in fact, I was doing the math. I'm glad that you bring up mentors. I was doing the math on my most profitable coach that the coaching that I've ever bought. Me and Corey both had coaching from our buddy Joe, who's also in our group. I've done over 100x on my initial cost for that coaching. I 100x'd my money with the help from paying for that mentor. And that was, wow. I mean, those are crypto gains. That was pretty freaking nuts to calculate those numbers. So we are huge advocates for coaching and getting help. Just like you're saying, Clay, when you're not the expert.
I've spent well over my real estate journey, over $250,000 on coaching and mentorship and masterminds. And that's how I was able to build the robust business that I had. Is because I just copy and paste what other people do. Yeah. And, because they've already, invented the wheel, if you will. And I'm not going to reinvent the wheel. I might change some things later down the road, but not until I've mastered the skill set that they've kind of paid before me. And so that's the way you had mentioned earlier, Clay, about cutting ahead of the line, or I can't remember what we were talking about. That is the one way you can cut ahead of the line in any business or any money-making opportunity, is by paying for someone who's already made the mistakes, who's already been there in front of you. And so that's how I was able to grab success out of real estate. And it's actually how I'm doing it in crypto too. Like Dane knows, I'm paying a lot of money right now to learn to be a node validator for the Pulse Chain ecosystem. And also I could do it on AVAX or Ethereum, or it's a skill set. And I'm paying a guy who's very well-versed and knowledgeable, and he's actually a Pulse Chain dev. I get to brag about that now. It's really cool. But I'm going to learn from his mistakes. He's got years poured into this of being running a Linux server. I have no clue. It's going to take me years to learn this skill set unless I pay him to cut me ahead of the line, right? And so it's like that with everything, and including crypto, So I'm glad we kind of touched on this, because it's super important. And you can do this in any business. I don't think it's related to just real estate, crypto. It's e-commerce, or if you wanted to go open up a hardware store, you better go find someone who's opened up a hardware store before, because there's going to be some things that you need to know. And so it's like that with anything, I think. Yeah.
Totally. So Clay, we'll kind of start wrapping up the show. What would be your advice to somebody that, maybe they're a real estate person or an entrepreneur, or, maybe not in general, if they're looking at cryptocurrency right now or potentially have some interest? What are some tips or tricks you'd give them in order to consider starting to build a portfolio?
I mean, I feel like I've already pitched you, but like that, I mean, get someone that's knowledgeable, like Corey just said, in the space. Allocate a certain amount of money or time or whatever that is, whatever resource you want to put into it that you can realistically put. I realized going into it, I was like, I know I won't have the time to learn the ins and outs of this. I just don't, and I won't. So I'm going to pay someone that does, right? And I'm going to have them just, maybe once a month or whatever it is, check in, like, okay, is this set up correctly, or what do I need to do here? Right?
How's this look? How's the health?
How's this look? Is this good? Great. Then I put it on the back burner, right? So unless, again, it comes back to what we talked about in the very beginning with real estate. What do you want to be the operator? And I know it's a little different in crypto, because both ways you're controlling, right? It's not like I'm just wiring money to Dane or Corey or whatever, and they're managing it for me. It's different. I'm still in control of that and what I decide to do, but with their guidance and advice. But do you want to be the operator, or do you want someone else to help you operate that investment? And so to me, it's money well spent. Again, I've more than earned what it cost me to get mentorship and coaching in this space. I don't know. I haven't figured out the actual dollar for dollar amount, but I know I've
It's a lot, I'm sure.
it's a lot of upside. Yeah, like the cost.
It's a lot of X's.
I've
like
already
getting the-
made back within a month, I think.
Yeah.
Like easily within a month of what I caught. You know, so like I just think you need to be smart about it, especially in the crypto space where there's a lot of fraud, there's a lot of uncertainty, there's a lot of scamming, right? So I just trying to go in it alone and learning it from day one is stupid. In fact, before I ever hired Dane as a coach, I bought crypto, I think when it was like $65,000 or $66,000 or something like that. And like, like a week or two later, it just like tanked. I was like, okay.
Bought the Bitcoin top like
I'm an idiot. Yeah, I bought Bitcoin and just like, that's when I knew. I was like, okay, I'm not doing this on my own. I need help, right?
Sure. That's fair. We appreciate your vote of confidence. So yeah, that was great. If you guys have any last minute questions, feel free to post them in the comments. We've had a great show today. Our friend Randy's on. Randy's currently in Twitter prison. We hope Randy gets out soon. So we're
free Randy.
Yep. Randy has an excellent group, an excellent show. We're part of Randy's group as well. Love Randy. If you guys haven't checked that out, heavily recommend going over there and seeing what Randy is a part of. It's really important to find the truth tellers in the space. Yeah. Randy is one of those in the crypto space. Clay is one of those in the real estate space. And so Clay is somebody that I know, like, and trust, that I anticipate doing real estate deals with the crypto gains when the time comes, once we feel like we're very close and topped out and I'm taking profits. Clay is one of those people from my network that I know, like, and trust. And we want to bring those guys to you so that you could decide who you want to work with, who can help you on your journey, all that type of stuff. Randy says, No Permissions is our group on Patreon.
Great group.
Absolutely. Thank you, gents. Absolutely. FOMOphobic says, I scraped together $100 for Hex when it hits 3 cents. Probably won't hit 3 cents. I do not think we're headed back to 3 cents, but I could be wrong. So be smart.
I think we could after V3 launches. After the FOMO wears off, and because if we go 3 months before mainnet and we have a kind of a pause, it's going to wear off, like the hype. Sure. And that's when you're going to start seeing the dumpers come back in. I think this is all speculation, right? I don't know for sure, right? But I think then we might have an opportunity, especially if around that same time we're seeing BTC capitulate again. Because of something, like right now, we're seeing a lot of FUD in the marketplace, and BTC went under 20K. And so we see something like this happen again while we're after the launch of V3. I can see it.
Sure.
I can see it.
I don't think it's likely, but it could happen. We'll see. It'll be fascinating to see. So we'll wrap up the show. Clay, how can people find you if they want to network with you and talk to you about potential opportunities working together? Where can they find you?
Yeah, I mean, I do a lot of social media, so just my name at Clay Rockwood. They can obviously follow me and message me there, or they can go straight to just our website for SOAR. It's called soarcapitalgroup.com. So SOAR, soarcapitalgroup.com /Clay, and they can get in touch with me directly there. Yeah, I'm happy to talk. I love talking about real estate. I love mentoring. I love helping. So if people want to just reach out for advice, help, partnership, whatever, I'd love to help.
Cool. Awesome. Well, appreciate you guys joining in this morning. Appreciate Clay being on the show. We will we'll have another stacked lineup next week. We're bringing on Stu Man from Tetra. Next week, we had to reschedule him. So we'll talk about automating your DeFi, which will be a lot of fun. We'll have to have Randy back on the show as well. Yes, and if you guys have a story that you think is interesting to come and tell on the show, we'd love to hear about it. You can find us. My link tree's here. You can find Corey as well. Corey Geary on Twitter or any of our social platforms. Feel free to message us. We'd love to hear about your story and bring you on if you have something that you feel like is interesting. And so with that, we will catch you guys next week.
See you guys.